Economic recession of 2023. Should you buy real estate? Let's talk about it. What's going on, guys? Chris here from Boselli Brothers Real Estate. So, it's 2023. We're facing an impending economic recession, but people are still buying real estate. Today, we're going to talk about all the things you need to consider if you are going to buy during a recession. Let's jump right into it. Real estate can be a solid investment in any economy. Actually, investing during a recession can be some of the biggest profits you will ever see. But only if done correctly. Investing during a recession or a bear market requires additional precautions to ensure that you have a successful investment. In this video, we're going to share some tips and tricks on how to navigate the real estate market during a recession and how to minimize your risk. First, you need to understand what a recession does to the market. During a recession, the real estate market typically sees a slowdown in demand. This means less people are in competition for buying homes, less people are renting, and both of these things can lead to a decrease in rents and property value. However, these additional risks can also create great opportunities for those of us who are willing to take on this additional risk and continue buying during these times of high price volatility. As I said before, recessions can present some of the best deals you'll ever see in a market cycle. As Warren Buffett said, be greedy when others are fearful and be fearful when others are greedy. So here are some tips for buying when others are fearful. Number one is make sure your market research is buttoned up. In another video we'll link right here, we go in depth into how to analyze markets, really examine all the key economic indicators in your market and make sure there are no glaring red flags. Now, you're going to need to tell the difference between red flags and normal recession indicators. For example, most markets will see some type of job loss or at least job growth slowdown during a recession. But if your market experienced job losses, was it a few small mom and pop shops closing up? Or did a large employer in your area just go through a massive round of layoffs? Number two, you need to underwrite more conservatively. Most investors and social media gurus always preach underwriting conservatively, but you need to understand what this truly means. When underwriting, anticipate rent growth and property value appreciation to be pretty flat over the next few years. And if you want to be real conservative, even underwrite a % or two decrease. A third tip is avoid variable interest rate loans if possible. With crazy fluctuations in inflation and interest rates, you do not want to get in a situation where your adjustment period on your mortgage ends and your payment skyrockets out of nowhere. Shoot for long-term fixed rate loans whenever possible, even if it's a higher rate up front. You can always refinance or get better loan terms down the road. And fourth, you're going to want to have multiple exit strategies in mind. Options are key during uncertain times, so having multiple different exit strategy options at the back end of your deal can help insulate you from risk and help you pivot quickly if needed. Now that we've given some tips about different considerations to make in a recession, we're going to show you where you can find some of the best deals. First, you're going to want to consider going after foreclosure or short sale properties. Guys, recessions means tough times for all. During a recession, more people are going to find themselves unable to pay their mortgage and they're going to face foreclosure. Unfortunately, that's just the nature of the beast. Nobody likes to see it, but it's going to happen and someone's going to buy those properties, so it might as well be you. Next, you're going to want to look for other areas of financial distress. Recessions breed financial hardship of all kinds. When the economy slows down, rental rates drop and vacancy rates increase. Both of these can affect owners' bottom lines and put them in difficult situations where they may need to sell even if they don't want to. Remember those variable rate loans we talked about avoiding? Some people are going to just be victims of bad timing, and there are plenty of owners whose fixed interest rate periods just expired as the Fed hiked interest rates up to double what they were a year ago. The bigger the payment, the more that payment just went up, and a lot of those owners are going to be underwater very quickly. You could also explore investing in tax liens. This is just an alternate form of investing where if an owner has enough back taxes, you can pay them yourself and buy the rights to those taxes. And then if the owner doesn't pay you off in time, you can either collect interest on the past amount due or eventually foreclose and take the property. Another thing to consider when buying properties during a recession is that there will be more motivated sellers on the market. If you have tried buying any property in the last 4 to 5 years, you know all too well how crazy it's been with all the offers over ask and just the sheer competition on any given house. As we mentioned before, recessions mean lower competition, less people in the market buying or renting, and a little bit of a price softening or even decline that will give buyers more power at the negotiating table. This gives you as the investor more power to negotiate on price or better terms. Just be aware that we are still in a recession and there's no way to know how to time the market when it bottoms out. Prices could be falling for another 6, 12, or even 18 months. This will limit your exit options and affect your hold times, which will in turn affect your project costs. So again, just keep this in mind when you're underwriting. A final tip, guys, and our number one tip for buying during a recession is to buy for cash flow. As we mentioned, investing during a recession can be very risky, and with uncertainty around interest rates, market pricing, and demand, you do not want to get in a situation where your project is on a time crunch. As long as you buy for cash flow from day one, you can comfortably hold the property as long as you need to, as long as you have a fixed rate mortgage until the market turns around and a better opportunity arises to offload the the property. Buy for cash flow. Any appreciation is just a cherry on top. So in summary, guys, a recession does not mean you should avoid real estate investing. Recessions can actually provide some of the best deals you'll ever buy, but there are some additional precautions you need to take. Number one is go back and research the market again. Dig through it with a fine-tooth comb. Make sure there are no red flags. 2, underwrite more conservatively. Underwrite stagnant property value and rent growth over the next few years, and even a 1 to 2% decrease to be extra conservative. 3, avoid variable rate loans. Fixed rate is key in uncertain times. 4 is have multiple exit strategies. Options are your best friend. After making adjustments to your underwriting process, when you go to actually find a deal, you can now look at foreclosures, properties in short sale, owners under other signs of financial distress, and even consider alternate strategies like tax liens. Also remember, a benefit of a recession is that you will probably now have more negotiating power as the buyer. So don't be afraid to offer more conservatively than you have the past year or two. Be a little more aggressive and ask for better terms. The worst they can say is no. And finally, buy for cash flow. Cash flowing from day one gives you the flexibility to hold the property as long as you want. Bonus tip, during recessions, increase your cash reserve amount to help account for longer vacancies, late rental payments, and potential evictions. In the end, just remember that when buying during a recession, you need to have a bulletproof financial plan. Make a budget for your project, stick to it, have adequate cash reserves, and buy for cash flow. And that's going to do it for this video, guys. Be sure to like, comment, subscribe, smash that notification button. Head to our website, bosellibrothersre.com. Subscribe to our newsletter for all things real estate and investing. As always, it is 100% free. Please help us try to reach as many people as possible. And that's it. I'm Chris. See you next time. I get